Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. From what we know about the past, the summer is when world liquidity starts to rise again. We are now in the summer, and every week we started to see small signs that illiquidity was getting better. It's likely to start going up again in July or August, and it will stay high until the end of the year. A lot of economic data points show that unemployment or the job market is getting worse and inflation is going down. If a few more of these come in, the Fed might do 50 bips right away. Asymmetric is a crypto-focused hedge fund that saw a huge 202% gain in the year ending March 31st, 2024. Joe McCann is the founder, CEO, and CIO of Asymmetric, the best results of any hedge fund during that time. McCann and his team did this amazing thing by putting a lot of money on Dog Whiff Hat, a Solana meme coin that went popular in November. McCann has been trading for more than 24 years and has worked on Wall Street with several executives from Silicon Valley. He has a deep knowledge of macro cycles and how they affect markets and asset prices. Investors from all over the world put money into his fund. Notable names like Mark Andreessen, Chris Dixon, and Circle Inc. McCann recently talked to Economic about how the economic and liquidity conditions will change in 2024 and how that will affect the prices of Bitcoin and other crypto assets. Even though the cryptocurrency market has been unstable lately, McCann thinks things will get a lot better. He said that February through June and the first half of the year are usually tough for crypto investments. But prices generally start to rise steadily again in Q3 and then really go up in Q4. This trend is likely to happen again in 2024 with extra help from the launch of spot Bitcoin exchange-traded funds, the upcoming U.S. elections, and the expectation that the U.S. Federal Reserve and other central banks will lower interest rates. He thinks that the Bitcoin market will have a lot of fun in 2024 and 2025. For us, macro is what guides how we think about what will happen to risk assets, especially crypto, and how can we best use crypto to talk about our big picture views. We can trade other things on the CME, like rates, foreign exchange, and so on, but most of the time we only trade digital goods. For us, this is great because, as we always say, if you get the macro right, you get the crypto right. Last month, I talked to Raoul Paul on Real Vision. He told me that everything is broad. I agree with you mostly. We found this to be a very good guideline when we started the fund in June 2022, just 10 days before. 3 arrows failed and everything else that happened that year, our outlook was not great. It looked like bears would win. In fact, we told people about that view through put spreads in Q4. We were actually short going into the fourth quarter of 2022. We're not stupid enough to short anything crypto though, so there is a fixed risk. We were right. Oh look, we put out our market reports every month. Anyone can sign up for them. The word is subscribe.asymmetric.financial. We believe that rates will be lowered soon. That doesn't seem to be agreed upon by anyone except the CIO of BlackRock. Here's why we think this is true. The Federal Reserve has 2 jobs to do: control inflation and make sure people can work. The data on jobs has begun to come in. The household poll and the NFP are very different from each other. Numbers about unemployment are going up. A lot of people come to the United States legally and illegally, which affects things like the NFP number, which I look into in more depth. Most importantly, the changes that are being made to the old titles. People don't care about that stuff because it doesn't get people to watch a website or a TV show. When you see the big number, you think PC is this or NFP is that. Then it's like, wait, what were the changes? All of the changes are coming back negative. Again, this is what we're using to decide how to invest in digital assets, since crypto is the farthest out on the risk curve. How should you best say that you believe risk assets will gain value? Most likely, it's crypto. We are still bullish for now. It's clear that Q2 has been rough. We had a drop in April, a bounce back in May, and a drop in choppiness so far in June. We were ready for this. In the past, Q2 has been the worst quarter for Bitcoin and cryptocurrencies in general. We thought the quarter would be rough. When it comes to risk assets going up in value, we do think the second half of the year will be a lot better. The Fed is responsible for both jobs and inflation. For the past X number of weeks, we've been seeing cracks in the employment figures. As of now, mid-June, going back to the May report and using JOLTS data, the household survey, and even the NFP in some ways, the changes that are coming in show that people have been so focused on the inflation story that they forget that jobs also matter. Rates are going down because the Fed says so and has said so. That needs to be backed up by data. At some point, we thought that employment statistics would be rolled over. It's beginning to. The business is showing signs of wear and tear. In one way, they're not big cracks, but you can see that things like the ESM report have been shrinking for months. That's not good, but the Fed isn't in charge of making things. Not only is that not their job, but it's also an election year. In the United States, markets tend to get pumped up in the second half of election years for some reason. We can twist this around all we want, but at the end of the day, the persons in charge of the U.S. Treasury and the Federal Reserve are chosen by the government. Do you think they want to work there? Most likely. When people think that the current president will stay in office, they usually want to act in a way that helps that happen. Let's bring that down to zero now. Take a look at what's happening with real rates. They've been very high for a long time and will stay that way. The new CPI report shows that inflation has gone down, which means that those real rates are even higher. That is a place that limits people. That can't go on for much longer. The Federal Reserve will have to cut rates or at least ease them off at some point, because keeping them high will slow down the economy and could hurt jobs. Anyone ever ask me what price they want? I just say more. Price goals don't make sense to me. They were made up by Wall Street to help sell side studies and other things. This doesn't make sense. It's silly for someone to set a price goal for something. Since about December 2023, this is how we've been thinking about 2024. We thought Q1 would be a real doozy, mostly because of the news about ETFs and the fact that new money was coming in for the new year. It turned out to be true. We thought that Q2 would be rough, and that's how it turned out. In terms of Bitcoin's past performance, the worst quarter is Q2. You can choose either the tax loss sale or the halving story. However, Q2 is rough, so we get ready for that. As for the future, we think that Bitcoin will probably reach its peak in Q3 and that other cryptocurrencies will start to gain popularity again. World liquidity also starts to rise at this time. It looks like that will be the case. You might see money flow to Bitcoin, but we think people will take on more risk and buy altcoins instead. We also think that Bitcoin will start to rise again in Q4. When it comes to control, I'm not sure where it goes. Things will depend on what happens with altcoins in Q3. But in the end, in Q4, you can always look at the kink in the VIX's term structure around an election, like at the end of October or beginning of November. Uncertainty is bad for markets. They will know for sure once the election is over. There were a lot of people who said the markets would crash if Trump won in 2016. Even then, they went up straight away because the market needed to know what would happen and the election was over. Again, we can see things however we want. In the past, September and October have been bad months for risky assets, especially the stock market. But getting through the election, I think there's a good chance that markets will keep going strong until the end of the year.